All right, bro. So as promised, this video will be about how the YieldMax tracker actually works, what the things in it mean, what all these numbers mean, and also understanding the holdings and the trades tables, as well as shares and PNL and all of that good stuff. Basically, a technical video. If this is not an estimate, so if you came here for an estimate, I'm not gonna do any like predictions, but I'll show what exactly I'm looking at when I'm researching one of their ETFs or making a decision to buy or not to buy, or maybe even to sell, and what I think it will do in the future. So basically, that's it's a layout and explanation of how YieldMax tracker works. Okay, so bro, if you will be watching this, smash the like button, subscribe to the channel. Even if you're not gonna watch it, still do that. That would be really awesome. And again, this video is not a financial advice. So yeah, let's begin. Okay, so what is YieldMax PNL tracker? Basically, YieldMax publishes on their website. You can download their daily trades and daily videos for all of their ETFs. So their ETFs, they have about 50 of them. You know, some of them pay weekly, some of them pay every 4 weeks, so-called groups. And groups alternate. There's a bunch of ETFs paying on group A, B, C, and D. And actually, if we look at distribution schedule, right here are the groups. So here's the group A ETFs, group B, group C, and group D. And so right now, this week will be group B that's paying out their distributions. They will announce it on Wednesday. I made a video about my predictions for group B. You can check it out in the just look through the channel. But anyway, so then group C will announce next week and pay. Usually they announce on Wednesday. X date is on Thursday and they pay out on Friday. However, because of some holidays and everything, they have this like distribution schedule, and it because of market closes and holidays and all of the good stuff. Sometimes these dates shift a little bit, one day left, one day right, and all of the good stuff. Usually one day forward. Anyway, so YieldMax tracker kind of collects all this data and organizes it so that you can see this easily, and you don't have to do any kind of editing and download your own export files and all the good stuff. And just to show you what the export file is, so here is the NVIDIA holdings. So the date here shows the 17th, and I just downloaded it. In the evening, I will show the 18th, but it's basically for today. It doesn't matter. So it shows all the positions that NVIDIA fund holds, okay? So there's the puts that they sold. Here are the treasury bills, and also this FGXXX, that's a government obligation fund, and also some cash. And when you download it, you kind of have to decipher some of this, like the treasury bills and the cash and everything else, and this government obligation. You cannot use that to estimate the dividend. Like, yes, they earn a little bit of interest, like here 4.25%, 3.875, 3%, but they contribute very little to the estimate. Okay, the way NVIDIA makes money is they sell weekly covered calls over here, and they have a synthetic position. So they buy call right here. Here's the two synthetic positions, and they sell put. So they buy call, meaning they have basically pretty much like an ownership of certain number of shares. Each contract is 100 shares. They have about 110,000 contracts, 111,000 combined. And to offset the cost to buy these calls, they sell a put for the same price. And basically that creates a synthetic position. Now the puts, they're cash secured puts, and so this is why they have all this. They put the cash they collect from investors into treasury bonds and money market fund, and a little bit they hold as cash. Okay, so you download, you get this spreadsheet, and you can put it in Google Sheets, or you can work with Excel and all of that good stuff. And so here's what I did. I already cleaned it up to basically show you in a better detail what these positions all mean. Okay, this is not the end of deciphering, but basically I marked two synthetic pairs. The yellow is the puts and the darker yellow is the calls. The red ones or the pink ones, whatever, those are the lottery calls, so to say. So they actually bought them, they spent the money, they make their money over here usually on selling weekly calls, but they also like, hey, if Nvidia goes up above $150, then we might make some money. So they bought some lottery calls for the expire, and then you have the expiration. So you have to further decipher all of that good stuff. Okay, so what YieldMax tracker does is it collects all that data and sorts it, inserts it in proper places, and then you have basically this table here with the holdings. Okay, so the yellow ones are the lottery calls, the white ones are the weeklies, and the blue ones are the synthetic positions. So sell put, buy call, sell put, buy call, and equal amount of contracts. and equal strikes. Okay, so these two right here are one synthetic position, and these two are another synthetic position. And then we also do the calculation in the money, out of the money, and the PNL is what it would cost for NVIDIA, for YieldMax, to currently close this position. So if they were to buy, because the put option is they are obligated to buy the shares for $120. And so for them to close this put, it would cost them $5.4 million. And the call, if it's a right to buy the shares, okay? So if they were to close it, they would collect $128 million. So that's what the P&L column stands for. Okay, the in the money and out of the money is the calculation basically between the share price and the strike price. And we are looking at last week's cycle. So it shows the closing price on Friday evening. Okay, so this is the current price, give or take more or less. It gets up, this price is from our database, so it doesn't get updated every 5 minutes, but gives you a range. And this here, the percentage, is the IV, or implied volatility, or how much the market is expecting NVIDIA shares to move up or down. And implied volatility, I believe, is calculated like 1 year out. So right now, the implied volatility is about 36%. So the market thinks that the shares of NVIDIA might go up or down by about 36% within a year. Not a great explanation. I'm not an expert on IV, but I know the higher the IV, the more these covered calls that they sell, or short calls, the more they pay and the more money they collect. And so, for example, msty, the implied volatility is much higher, therefore they collect more money on the short calls. So what does it mean, short call? It means they're selling a call, but they're saying, like, I don't think that the stock will go above this price. And so on Friday, they sold this $145 call, and they collected, we can see here, what is 145. So now we're getting into the trades tracker. Okay, so they collected about $1.35 per share, but there's a lot of them. So these are individual transactions, individual trades, and here they're like grouped up by the share price or the strike price. Okay, so let's first cover the summary section. Now, it's not first, we already covered the holdings. But anyway, so this summary section, it calculates all the PNL or PNL for the holdings. So that's synthetic position. And right now there's, again, we're looking at a cycle that's already concluded on Friday, but it concluded with the synthetic position being up $1.89 per share of NVIDIA. Okay, so this is unrealized gain per share of NVIDIA. And when they close those positions, they'll likely realize this amount, or probably even more. I think NVIDIA will keep going up. So this is unrealized gain per share. This is total unrealized gain on all synthetic positions. And this here is PNL, or unrealized gain, or sometimes a loss. I'll show you on a different stock. Unrealized gain or loss per position. So $130 synthetic, they are up about $71 million on those, and 120 synthetic, they're up $122 million on those. Okay, so this section right here is how much they've earned in this cycle. So the cycle started right here on May 18th and ended on June 14th. So the start date is always Sunday, because we want to avoid, like, market days. So I set up the start date to a Sunday and the end date to a Saturday. So it ended on a Saturday, June 14th, and this way the system doesn't like skip an actual trading day. That's just technicality. And here we have the declaration. So on June 18th, we have a countdown clock right here. They will announce their dividends on June 18th. So this is the cycle declaration date at 6:55 a.m. This clock is counting until 6:55 a.m. on the declaration day, and then it resets and goes to the next group. Okay, so here we have the groups. Right now, you do not have access to this page, to the group section. It will be added later on. This is still in development. Okay, so it automatically selects the current active group. So right now, active group is B, because they still have not announced. Tomorrow, this will switch to group C, then group D, and then repeat the cycle. Start with group A, B, C, D, and then what will change is the declaration dates or the announcement date. So it will just cycle based on this distribution schedule. Okay, let's go back here. So here we have, for the cycle between May 18th and June 14th, NVIDIA has made an actual realized profit of $138 million, and that is $1.41 per share. Okay, here's the number of outstanding shares, or how many shares of NVIDIA, of NVDY, are owned by investors. And this amount right here, the current PNL, is split as a dividend between these many shares. Now, sometimes YieldMax chooses to pay a little more. Sometimes they have a loss. They usually still pay. And so this amount, the PNL per share, is how much they earn per share, but not how much they will pay out. Okay. So, and then over here on in the third section of the summary, we have the fund nvdy price right here, latest dividend, and the underlying security, which is NVIDIA, and that's the price and the IV. So that covers the summary section. Let's now open the dividend estimator. So the dividend estimator is based on algorithm, and it accounts for the PNL in the cycle, PNL per share, number of shares. It accounts for the IV of the underlying security, accounts for the share price, the previous dividend, and also the synthetic PNL. So it looks at many different variables. And in the version 2, this is the latest version we have right now, we have the rolling PNL. So what is the rolling PNL? It's basically they have some months where they make money, some months they lose money, and it tracks how much they've made or lost per cycle. So it goes the cycle end date right here, total loss or income per share PNL. So right now we made 138, and that's this cycle ending June 13th. Okay, and that's $1.41 per share. Number of shares outstanding, synthetic PNL for this cycle, and how much cash they have on hand. And I'm not sure if cash includes the federal obligation or just the cash position. I don't remember. I don't think it's very critical for the rolling PNL. What's really important is how much money they have earned or lost year to date. Okay, they lost $176 million, and per share. So the per share amount is based on the latest outstanding shares. It's not some of these numbers right here. But basically we take the final rolling PNL total and divide by number of outstanding shares currently, and we get PNL per share year to date. Okay, we also have fiscal, but we don't really know exactly when their fiscal year starts and ends. And in some interviews, their manager said it's basically somewhere in October. So I'll clean this fiscal year to only include October and onwards, whereas year to date includes any cycle that's concluded in January of this year and goes until present cycle. Okay, so that's the rolling PNL. And as I said, the algo estimator now includes the rolling PNL. So for example, if they made a ton of money during the year, they can afford to pay out most of this PNL per share or income per share that they earned in the cycle. But as you can see, NVIDIA has lost almost $2 this year, and so they have to be more. So they have to be more conservative with how much they pay out this cycle, and we include that into our dividend calculation, into dividend estimate. And as you can see, we estimate they will pay less than they've earned in the cycle. In fact, I think they'll pay about 85 cents. We'll find out in 14 hours and 2 minutes and 12 seconds. But yeah, so that's the estimate. Then the next line is the yield, and yield is based basically on the current share price, and they pay 13 times per year. So we take this amount divided by the share price and multiply it by 13, and we get the yield. I think I did the math correctly. But basically the yield is based on this number, that's 76%, and $1.30, that's 103% yield, going for forward yield based on the estimate amount. And then we have the IV estimate. Basically it is saying that if they paid the implied volatility, so the implied volatility is 36% divided by 13 months of the share price, and that's 46 cents. That's the IV estimate. I said 13 months, 13 payment cycles in a year. That's what they do. So 4-week cycles, 13 times a year. Okay, so I think that covers the this section right here. Let's jump a little bit up over here. So here we have basically all their funds. You can get details on all of them that are in our database as they come out. So for example, the BRKC or Berkshire Hathaway fund just came out a week ago, and it's already in our system. We're collecting data, but because it's very new, we have very little data. As you can see right here, the shares outstanding. I don't know why this says 25,001. Probably they just entered something like fat finger. They entered incorrectly, but whatever. So same thing, how much they've earned so far, and the estimate and whatnot. So all you have to do is just select the fund, and the system will automatically display the fund you need. So next one is the cycle. Again, here is the distribution schedule. So we're in group B. So here's the cycle for group B. That's the last one, and here's the current one. Declaration June 18th. X date is June 20th, and then on Monday, June 23rd, they'll pay out. Okay, and so based on this schedule, you can select different cycles here. So right now, it's selecting the current active cycle. And what active means is until they announce the dividends, it's active. Okay, and once they announce the dividend, it will show automatically the next cycle. It will become current. But although there is already data for the next cycle, they didn't have any trades. But we have the positions, the the holdings positions for the next cycle. So while it already technically began, because today is June 17th and it began on June 15th, there haven't been any trades yet. The system will update the database at 6:30, then we'll do another update, because sometimes, and I'll show you, their data is incomplete. You can see it. I have downloaded this around 4:30, 5 o'clock, and it had very little information in it. So that's why we do multiple updates throughout the day to capture everything as it comes in. Usually around 6 o'clock, the data is complete, but sometimes it's not. That's why we do additional database updates. So yeah, so you can switch between different cycles within the same fund, or you can switch to a different fund. And for example, we can go to what paid last week. I think it was tsly. So let's jump to tsly. The cycles will change. So you can see the active cycle right now is the July 9th. That's when they will announce the dividend. But this clock only it counts to the next declaration cycle, which is tomorrow. All right, even further up here we have the popular ETFs from YieldMax, and then in this blue section right here we have the current group ETFs and also the weekly ETFs. So I'll show you the weekly. They pay essentially every week, and here's the I think most popular is the YMAX ETF, and basically what it does, it's a holding ETF for all of their group ETFs, group funds. Okay, so they include all the funds in the groups. Like here, let's look at the group again. They include all of these guys, group A, B, C, and D, except for the short ones. So the crash, it's a short ETF. They do puts, they trade puts, I believe. And then we have, and that's for tsly. Over here we have dips for nvdy. That's a short of nvidia. And over here, that YQQQ is a short of QQQ. Winter is the short of msty. Okay, so those are not included in YMAX. And what happens is they hold these ETFs, and these ETFs, they pay out the dividend, and so they collect it and then distribute that dividend to the shareholders. And so basically you can just buy YMAX and you don't have to select specific ETFs, because sometimes, for example, if we look at, let's look over here, I'll zoom out on this guy. So SMCY, okay, super micro computer, and their underlying stock, it went through a lot of volatility recently. You can see it was over here. Let's look at the price chart. Over $100, then it dropped to below 20. And so that greatly affected the SMCY fund. You can see where's the price right there. It was 55, 57 at some point, and it's now below 20. So what happens, the reason why YMAX is so popular is you don't have to hold individual funds and risk, them going down significantly. Like SMCY has had tremendous loss. You can see right here, everything is in the red, even with the crazy dividends they're paying. It's a huge yield, 100% forward yield, and still they're down significantly. And if you don't want that risk, YMAX might be the ETF for you. Again, not financial advice. So because YMAX just basically holds these funds and collects the dividend and distributes it to the shareholders, they do not have synthetic positions. The underlying funds themselves have the synthetic position, but YMAX and YMAG, they do not do that. Okay, so the synthetic positions basically say NA, none, zero, all of that good stuff, but they still have a PNL, and PNL is basically the dividends they have collected in the previous cycle, and they have PNL per share, number of shares outstanding, and how much cash they have on hand. And this section, okay, this is the price of the YMAX itself, but there is no one underlying stock, as the case with SMCY. The underlying stock is SMCI, and they trade the options on it. Okay, with YMAX, you have no underlying stock, single stock, but you have many of them that have an IV, and so the blended IV or combined IV of all those stocks is 39%. That's current. It changes all the time. And so the dividend estimate is essentially based on the amount they have earned and the shares outstanding. So that's the dividend estimate. The algo yield based on the price and the estimated dividend, and the IV based estimate is again based on the blended IV of the fund holdings. So then for YieldMax or YMAX, we have this additional table over here that's last 10 cycles, and I added this to basically see how accurate our algo estimates were. And as you can see, the variance is an average of 1% up or down, so it's very accurate. Then we have YMAG, which is not so accurate, the variance, and I'll explain to you why in a second. They only hold 7 stocks, the so-called Magnificent 7. So MZ, Apple, Phoebe, GUI, MSFO, nvdy, and Tesla, and those are Amazon, Apple, Meta or Facebook, Google, Microsoft, Nvidia, and Tesla. Okay, so these funds, they trade options on the underlying securities, and then when they collect the dividend, they pass it on to YMAG. But YMAG, there's only 7 funds, but how do you split that between 4 payments? Okay, 4 weekly payments, because those are inside the groups, and so one of them, MSFO, is by itself. And here's where the 10 cycles tab comes handy. You can see this dividend right here. That's how much money they actually collected during that cycle, 652, but they paid 10.5 cents. And so basically, that's why you have such a huge variance over here for YMAG. The way I see it is basically to smooth the curve, to like not jump from 16 cent to 6 cent, because people kind of get annoyed by that. What they do is they smooth out the curve. They hold back when they make a lot of money. They hold back a little bit of it for the next week, and to kind of have more or less even dividend payment. And they started doing it recently. Before, they were not doing it. This is a recent development. But this is why we have this huge variance. And we basically, I think if they collected about 17 cents in dividends for the last cycle, I think they'll pay a little bit more, because last cycle was Tesla and GUI. So they will smooth it. No, they'll probably pay a little less. I don't know. Basically, we cannot guess what they will pay, because their smoothing of the curve is not always logical. So we just provide you the estimate of how much they actually earned and what they should be paying. But because of their, that curve, smoothing the curve, you see it was all over. Like over here is a good example. They pay 5 cents, then they pay 10 cents, then they pay 19 cents, then they pay 18.5, then they drop back to 5 cents. So it was kind of crazy. I think the investors were not happy with this jumping all over the place, and so that's why they have kind of like merged, so it's more flat line, more equal from week to week. That's how I see their dividends going. And so then there's more weekly funds, but I didn't show you the shares and the dividends. And for this, we'll actually go through their biggest fund of all, the best performing fund, I would say, msty. And when I say best performing, bro, you gotta check this out. They've returned in about 14-15 months that it's been in existence. If you reinvested your dividend then, and you just bought at inception $10,000 and reinvest all the dividend, the return would be 274% in 15-16 months since inception, which was, when was that? In March, right here. Oh no, February 23rd. That's the first day of trading, and since then, returns are amazing. So yeah, msty is the biggest fund they have, and very, very profitable so far. We don't know the future, but what I wanted to show you is when I did my estimate video for msty last week. Okay, so this is when they paid the announcement. Paid $1.47, but when I did the video, the estimate, they had 192 million outstanding shares. But then 2 days or 3 days before the dividend, that number jumped by 15%, and that's why I include this shares outstanding and dividends table right here, or this pane, this box, to kind of, because I think it's very important to understand the dynamics of shares outstanding, and it's basically diluting the dividend by 15%. So there's more shareholders there, but a fixed amount of money that they have earned in the cycle. Now we're looking at last cycle, or at current cycle. Let's look at the last cycle. They made $250 million, and if split between 192 million shares, that would pay roughly this amount. And by the way, when I was making that estimate, we didn't do rolling PNL algo. Now it's included, and so the estimate is lower, and they actually paid more than my estimate was. But what happened is they paid less than I originally thought, $1.75, because the number of shares grew by 15% 3 days before declaration. And so once they declare, all the shareholders on record receive the dividend, and now they have to split the pie, fixed size pie, among more people. So that's why I think it's important to have this box over here with outstanding shares and dividends. It's just useful and whatnot. And so final thing, let's look at their trades. So this is a very big one. Let's look at something smaller. So you can actually like go through all the dates in a cycle, or you can view all trades combined. But it's a very long table because they do a lot of trading. But anyway, that's why I made it so that you could select single days. And what I'm planning to do is actually, because still like over here they have 31 trade. It's like hard to understand. What I want to add is a box here. I'm not sure about the location, but basically analysis of the day's trades. It's going to be for the latest day, not for the whole cycle, not for the whole month. But basically to analyze their strikes and how many contracts were traded and and group them, do the average, and just so you don't have to kind of like, go through 31 lines of the trades they made. And the trades they make, that actually is the money that goes to the dividend payment. So here on the last day of that cycle, they made $31.5 million. So that gets added to the PNL, and that gets added to PNL per share and gets distributed to the shareholders. All right, guys. So that kind of covers the whole YieldMax tracker thing. One last thing here, we have basically like a simple in small text start date, end date, X date, and the payout date for the cycle. And here you have the declaration date. Okay, so that more or less covers the YieldMax tracker. It's nearly complete at this point. While it's still in beta, most of the problems are now sorted out, are fixed, and we just have few obscure ETFs that pretty much nobody likes or invests in. We gotta make it complete and make it work for those, but the majority of them, all the group ETFs and all the weeklies, work correctly at this point. Spent the whole last week basically making sure that the weekly ETFs provide correct estimate. And so here's Ulti. They actually did make less than 1 cent in the cycle, and you can look at it here. They made $0.004, so 0.4 cent in the cycle per share. This is $337,000, but there is a lot of shares outstanding, so that's a very little amount per share. Okay, and again, they don't have synthetic. They just have a lot of different holdings. They have shares. They sell short calls. They buy puts, hoping that the stock goes down and they profit from the puts, and that the short calls do not get assigned, and all of that good stuff. So a lot of things go on with Ulti, but basically, last time I did the weekly estimate, Ulti and all the other weeklies except for YMAX and YMAG were showing essentially 0 everywhere. There was no IV-based estimate, there was no yield, and there was no actual dollar estimate. So all last week I was fixing the weeklies and also reorganizing the backend. There was some like stuff missing. I'll show you on the example of msty what I had to deal with yesterday. So like I make these videos, but then in the backend there's a lot of fixing that's going on. So essentially what happened is msty had over here 81,925 calls that they bought, but the offsetting put position is right over here. But because I don't know, was it fat finger or something else, they have different price, and so one of them wasn't actually showing. This big position was not showing in the table. It wasn't inserted properly into our database, and so spent half a day fixing that to make sure that we have correct data in the holdings table. I think that's very critical. So again, I added the long calls right over here, added yellow color. The blue color is for the synthetics, and the white color is for the short calls or the weeklies. All right, guys, this was long. I know, but thanks for watching. Smash the like button for the effort, subscribe to the channel, and in the description for this video we have a 25% discount code to this beautiful system for tracking different YieldMax funds. I think it's very useful, at least for me, in making buying decisions or selling decisions. For example, I was thinking about going into Ulti, but looking at their rolling PNL, it just doesn't make sense for me, because year to date they've made less than 4 cents per share, and yet they paid out $2.50. And there's a lot of interest in Ulti right now, as you can see over here in the shares outstanding. They just increased it by 15% in the last few days, last week. And I am thinking to myself, like, bro, how are they affording these dividends? Even 10 cents a week, that's a big dividend. Look, that's yielding 68%, or like up to 90%. Yeah, so to me it makes no sense, and so I decided not to buy Ulti, because I just don't see. I think ultimately it will result in the share price drop, because like people got excited once they went weekly, and they changed a little bit how they operate. Like now they buy puts, they sell long calls, they hold the shares. But I just don't see, you know, at least for me, it just doesn't make sense. They pay out much more than they actually earn. And so, and year to date, they actually have a negative 14 cents. So loss per share year to date, and yet they're making all these crazy dividend payments. So I decided not to buy OLTE. This is not a financial advice. I'm not telling you not to buy OLTE. Like, I have a few shares, but I'm not actively buying it. Okay, so I think this system is tremendous for analyzing the stocks and analyzing like what's happening. It is backward looking, but I think it's just much more useful than, you know, downloading uh, these files and like cleaning them up and trying to figure out what to do with all these numbers, deciphering these columns, like what the hell does this mean? You know, so this is a contract name. Basically, you can split it like this: 25 is the year, 07 is the month, 18 is the expiration, P is the put, and then the strike price. So it goes like this, boom, 120, and then there is 1 cent, and you can see it over here, 1 cent, but like there is no strikes that end with 1 cent. So I'm not really sure why they do it this way. Maybe just like not to confuse the computer that spits out all these files, because it's obviously not made manually by a human. It would be impossible to keep doing it for 50 funds without making a lot of mistakes. So this is a computer generated file, and basically like you have to decipher what these things mean. Like put, they have a P separate, then call they have in front of the strike price, then the number of shares, and the puts are the negative and the positive. So I tried doing that, but that's why I actually created the YieldMax tracker, because I couldn't keep up with downloads, and I couldn't like just understanding. You miss 1 day of trades, you don't know how much money they've made. Like your whole cycle is off completely. And by the way, there is a guy on YouTube, Return on Dividends. If you're watching a YieldMax video, you probably know who he is. He does a tremendous job, and like big kudos to him. He actually downloads these files every day, like clockwork, on time. I don't think he's missed the download in the recent download at all, because I've when I did my video for last week, I actually wanted to confirm what he predicted for tsly, and it's part of my tsly estimate video. And so we come up with absolutely the same amount of current PNL and PNL per share. So that means he downloads every day. You know, I tried doing it one time. After 3 days, I already forgot to download, and I was only doing it for like 3 or 4 funds. So anyway, yeah, that's why I created the system. It's automated. The backup will happen in 30 minutes at 6 o'clock right now. And so the today's data will start rolling in, today's trades, today's holdings, and then throughout the evening it will keep updating. If the 6:30 p.m. update is not complete, then it will do another one at 8:30, upload more data to make it more complete. By the end of the day, usually everything is squared away, but even at 6:30 it's usually complete. Just sometimes when they're super busy, they don't have time right away to do everything. All right, guys, again, thanks for watching. 25% discount lifetime is the link in the description below. I'm gonna put a discount code right over here, and that promotion is running until the end of 4th of July weekend. So that's, I believe, July 7th it ends on a Sunday, and after that will be gone. The 25% is for life. Even if we change prices in the future, your price is locked in. 1 week free trial, so you don't have to subscribe to the you don't have to, you know, keep the, if you don't like this, if you find this useless or whatever, no hard feelings, just cancel. Free trial for 1 week, and if you decide to keep it, I would love you to do that. Welcome to the family. I'll be making a lot more of these videos, but I think this basically covers the overall layout of this system. Thanks for watching. I'll see you in the next video. Peace.